I would say, compared with the history of gold, it's not much of a rally so far. It looks like the rally has started. It looks like it's got a long way to go to my mind. I think there's a lot of catch up to be done if gold is going to catch up with the increase in the level of government indebtedness. And we know that the government indebtedness is set to accelerate at a faster rate than ever before. So it's just a question of time before gold's pace of price increase starts to increase. We're up 1.5% nearly today on the silver price. It will be. It should be more explosive than gold on the upside.
Clive Thompson, a retired wealth manager, notes that former President Donald Trump, given his extensive business interests and significant debt, would likely benefit from lower interest rates. Reduced rates promote investment, enhance the stock market, weaken the dollar, drive inflation, and lower the cost of holding gold, thereby making the precious metal more attractive as an asset. The implications of rising debt have become more evident during the COVID-19 pandemic. Governments worldwide issued unprecedented levels of debt, much of which is now nearing maturity. In the United States, the Treasury faces a daunting task of refinancing nearly $10 trillion in maturing debt in 2025. On top of this, an additional $2.3 trillion will be needed to cover the federal deficit, bringing the total refinancing requirement to approximately $12.13 trillion, about one-third of the nation's outstanding debt. This challenge is not unique to the U.S. G10 nations collectively face approximately $4.50 trillion in maturing debt, with another $2 trillion required for deficits. In total, $18.20 trillion in bonds will need refinancing or reissuance, raising concerns about the market's ability to absorb such volume without causing significant volatility. If the scale of global debt issuance pushes interest rates higher, it may compel the Federal Reserve to intervene by purchasing bonds to stabilize markets. Such action could drive gold prices higher as a hedge against economic instability and inflation. Gold has already surpassed key technical resistance levels, setting the stage for potential new all-time highs. Analysts suggest that if gold exceeds $2,825, it could trigger a rally toward $3,000 or beyond. Thompson highlights that gold's upward potential remains robust, as its price has yet to fully align with the rapid growth of global government debt. He predicts that the current bull market in gold, which began in 2024, could turn out to be the longest in history due to government's reluctance to curb overspending.
I'm quite sure that Mr. Trump's businesses are borrowers, and it would suit him very nicely to have lower rates. So that's my first comment. But let's say that he's successful in persuading the Fed to do as ordered. Obviously, lower interest rates do encourage investment for the economy, for companies, so that's good for the stock market in a certain sense. But it's much better for gold, because lower rates will lead to higher inflation down the line. It lowers the value of the dollar, and it makes the cost of holding gold less expensive, what that's called the carry cost, because when people are holding gold, their alternative is put money on deposit, and if they get a lower rate on deposit, well, it'll make gold seem more attractive. All of these bull markets in gold occurred during my career, and it's obvious to me that the present bull market, which did start in about 2024, is at this particular moment the shortest in all of history. But of course, it's not over; it's just starting, and I think that I think in all probability it will turn out to be the longest in all of history. And the reason for that is simply there's a great deal of reluctance by governments to rein in their overspending. I would say, compared with the history of gold, it's not much of a rally so far. It looks like the rally has started. It looks like it's got a long way to go to my mind. I think there's a lot of catch up to be done if gold is going to catch up with the increase in the level of government indebtedness. And we know that the government indebtedness is set to accelerate at a faster rate than ever before. So it's just a question of time before gold's pace of price increase starts to increase. We're up 1.5% nearly today on the silver price. It will be. It should be more explosive than gold on the upside. Yeah, I mean, any sort of tariff on China will cause supply chain disruptions for companies around the, well, certainly for American companies, it'll increase costs and in a way, the kind of areas which are going to be at risk would be those who depend on that supply chain. Companies like materials, consumer discretionary, industrials, technology companies, healthcare companies, they're going to be at risk in the United States if there are tariffs imposed on Chinese imports. On the other hand, the companies which make the things which are normally the American companies which make the things which are normally impacted from China would be net beneficiaries. So it all depends on which side of the fence you are. But at the end of the day, putting tariffs on China would be relatively good for the gold price because of the economic uncertainties that will create and the inflation that it will create.
While gold continues to capture attention, silver is also positioned for significant growth. Many analysts believe 2025 could be a standout year for silver. To signal a strong breakout, silver prices need to surpass $32 and maintain momentum above $35 in February or March. If this occurs, a rally toward $40 or higher could be within reach. Recent market data reflects silver's strong momentum, with prices reaching $30.94 per troy ounce, marking a 7.5% gain since the beginning of the year. The gold-to-silver ratio has also declined, indicating a relative strengthening of silver compared to gold. Thompson points out that silver's performance has outpaced gold, thanks to increasing industrial demand, particularly in the electronics sector. Over the past 2 years, silver usage in electronics has grown by 20% annually, bolstering its upward trend. The shifting dynamics in global markets signify a critical turning point for gold and silver. Nations are increasingly reducing their reliance on the US dollar and stockpiling precious metals, laying the groundwork for a significant transformation in the global financial system. At the same time, silver's growing role in advanced industries, such as electronics, highlights its dual appeal as both a strategic and monetary asset. As these trends unfold, precious metals are expected to remain vital for wealth preservation and technological innovation. If this discussion resonates with you, subscribe to our channel and hit the notification bell to stay updated. Your support helps us bring you the latest insights. Thank you for being part of our growing community.